Hello everyone, welcome to Traders Classroom. Michael Madden with you on Tuesday, the 9th of January. We're going to take a look at Euro US dollar. In the last video I published in December, late December, we looked at Euro US dollar. This is basically the chart from the end of the video. We were looking at the intraday and the daily updates. So for the following charts we're going to look at in this video, I've taken them from the archives. And I want to take a look at the price action, at the scenarios that unfolded, and just to kind of start to show you how we could be considering potential trading opportunities or building trading plan around this. We're going to get into more specifics with regard to the nuts and bolts of the trading strategies and the playbook for our Elliott wave patterns. So let's just look at these charts. It's a form of back testing. It's how I look at this. When we go back and we look at patterns, how price action unfolded and how we will react or how we should have reacted is how we learn as discretionary pattern recognition traders. So we're not going back and inputting numbers into an algorithm or whatever. We have to visually go back, look at price action and learn from our mistakes or see how we would do things better. So if you haven't looked at the previous video, take the time to do so. If not now, we'll move on. This is where we're at. Key level of 107.72 with a potential reversal unfolding here for a fourth wave pullback. I just want to give us a little bit of context on the wave pattern we're working with. So this is an impulse for the daily chart and the 4-hour chart then is showing the internals, a zigzag pullback unfolding. We're back to 50% retracement of green wave 3. So, and testing the upper boundary of this channel, the 1-2 channel. We often refer to it as a base channel. But ultimately, downside expectations are satisfied. Trading below the low of the previous fourth wave and the 38.2% retracement of the third wave would satisfy our expectations. The sharpness of the pullback is alternating with the sideways wave 2. So those are guidelines that we're incorporating or taking into account with regard to this. We've got a corrective price channel established, breaking out of the channel, moving swiftly higher will add more credence. So now I'm just going to take a chart from just a few more updates later, and we can see that Euro US dollar did push lower. We violated the key level that we're working with. So at this moment in time, we know that a wave 4 can push lower because it'll take overlap with green wave 1 to totally dismiss it. But that's not a key level or a juncture that we would use to be trading from a 1-hour chart. If we were considering trading from our daily chart, yes, the door could be open for lower, but in the intraday chart, we violated the key level we're working with. It's best to step aside and see what other pattern may become clear. So at this juncture, we've upgraded to the expanding diagonal. We have a key level to work with for further downside, 108.18, and while intact then, we're favouring or we'll keep the door open for lower. But in the back of our mind, of course, we must be aware of if this is a wave 4, it's approaching a level where we want to see it end, and the potential for upside is for Euro US dollar to get above 110.17. So a few days later or a few sessions later, we can see that price action is rallying above 107.24. We've established a corrective price channel, breaking out of the channel and getting above the wave 4 high at 108.18 will add more credence. But if we get impulsive rally followed by corrective pullback that holds above 107.24, again, that would be something worth considering. And we can see then the charts taken from the update. We did consider an impulse for wave 1, sideways price action. We're back up challenging the upper boundary of this channel. We've already tested it once and it's recognized the trend line at against 107.42, watching to see now if a higher swing low has been established from 107.24 and if the bulls are ready to continue higher. We're basing our outlook off the higher wave degree charts. We're considering a corrective pattern complete in the 1-hour chart, and that's building a thesis then for price action to head higher under a bullish trading outlook. Moving on with some more price action, we can see that we're getting impulsive price action to the upside. So adding credence now to the ending diagonal, we're getting some swift price action and we're looking for it to continue while 107.42 is intact. Just a quick look at the daily charts as well, trading off the daily price action. If you were working with 106.40 we could now adjust that key level as we're favouring the corrective pullback may have ended, and we're looking at the low of this fourth wave as the key level for price action to continue higher in green wave 5. So managing the risk once we have the evidence to do so, and this is what we would literally be referring to as risk management when it comes to applying the wave principle and the key levels associated with it. Getting those levels from areas where price action must not trade above or below to keep the pattern we're working with in preferred status, and then using that information then in the direction of the trend, which in this case is up. So just back to the intraday chart, just so we're aware of the 1-2 scenario we're working with, and looking higher from 107.42. And we just go on some more price action. We can see that we got a surge higher, but a quick pullback. Held above 107.42 and against 107.67 now, watching to see if we push higher from here. We expect price action to continue higher in an impulsive manner. If this is a third of a third outlook, getting above 108.95 would be the bull's next objective. And here we can see that we did get higher in an impulsive manner. We're looking for wave 3 to continue up. We've raised the near-term key level to 108.80. If we were to trade below that, it would be running the risk of price action continuing lower. But at this juncture, getting over to the 4-hour chart, we can see that we've got a nice impulsive surge, and we're coming close now to getting above 110.17. Ultimately, the level we're looking for wave 5 to get above. Now, at this moment in time, we must be aware of how we're going to deal with what would be a surge in price action. Are we willing to let price action continue to pull back and continue higher if we're looking for wave 5 to get above 110? Or if we've got up to some upside targets, i.e. if we're looking for price action to get above 110.17, are we willing to close out the trade just below that or on a 90% retracement? Because we're setting up our trading plan saying the price action was not trade below this level. We're looking for it to get to this level. And yes, we can pick the wave 3 peak, but there's going to be a number of other trading strategies looking for these peaks as well, or there's going to be loads of eyes on various peaks and troughs. We need to use the guidelines of the wave principle. So when we get a surge in a third wave, are we willing to take some profit or take profit on that surge, i.e. we start to get up to some of the third wave projections? If we do peak in wave 3, we must be aware that where's price action getting back to? We'll establish our Fibonacci projections, but from looking at this chart, the low of the previous fourth wave, it comes in at 108.80, so we could get a risk of a pullback to this level. Are we willing to allow for that to occur if we're going to stick with the bullish outlook here? We're not going to get too freaked out once price action is trading back here and we've given up whatever profit it has come back into. We need to be aware of all that as price action is unfolding, and not to make those decisions before we enter the trade. And now we can see a while later we did get a pullback to the low of the previous fourth wave. We've adjusted the wave degree. We're still looking higher in green wave 5, but the size of the pullback warrants an adjustment to the wave degree. So now watching to see if 108.88 remains intact, and if this is the higher swing low that will set the stage for Euro US dollar to get above 110.17. Now, before we move on to another chart, just to be aware, we're back at the very same setup again that we looked at from our daily chart, where we had 1, 2, 3, wave 4 possibly in place or maybe ended, working off a key level from that fourth wave and looking for wave 5 to get above 110.09. Another basically intraday trade setup presented, where we know if price action gets below 108.88, it's looking less probable or less likely that this is wave 4. It's not a rule violation, but going by the guidelines, and we know then if this is wave 4 and if wave 5 gets going, we're looking for a break of 110.09, possibly 110.17, and we've upside targets for green wave 5. So it's the same patterns playing out over and over at multiple degrees of trend. We need to decide what patterns or what time frames we're going to work off, and then establish trading plans with that in mind. Here we can see where price action has rallied from 108.88. We got nice impulse up, corrective pullback down, impulse up, corrective pullback, and we're now looking higher against 110.72, but ultimately using 110.45 if price action is in wave 4, going back to the same rules, we must not see overlap with wave 1, and we're watching to see if we do continue to push higher. Looking over here on the 4-hour chart, we've traded decisively above 110.17, tagging the upside projections that we're working with for wave 5, but ultimately the trend is still up while these key levels remain intact and there is upside potential. That's again getting back to where we make the decision of where we exit a trade. Are we waiting for price action to pull back, and once we overlap a key level, we exit? Or do we exit when price action runs into a target that we're working with and we're happy then to have exited the trade? There's different psychological aspects to both. When you exit a trade where price action runs into your levels, your upside levels, that's more satisfying than allowing for price action to get back to a level, because you've actually had to give up some profit or some money on the table for that level to be taken. The other scenario is if we exit a trade once we hit an upside target or downside target and price action continues to push through it, we must be willing to accept that. And that will come with repetition, more trades and the more we develop who we are. If you have the personality to allow for price action to pull back and take out a key level, that's perfect. And if you have the personality to exit into a target, but price action continues through the target and goes on, then you'll find out if you're that person. But you're basically either one or the other. And now moving on a few hours later, we can see that price action continued to push down. And we did come down and challenge the key levels we were working with, adding more credence that wave 5 had already peaked. We go back, adjust the internals, and you can see now with the impulse channel, etc., we were working with, we violated the lower boundary, and now it's looking more like wave 5 has peaked. So at this juncture, another opportunity presents itself, but not to get too far ahead of this lesson. Ultimately, we were looking for price action to head higher from 107.24, looking for an impulse to unfold for green wave 5. There were multiple scenarios along the way where we had specific trading opportunities or scenarios where we could exit the trading potential or trading setups we were working with. And it's not until we go back and look at price action and understand how we were tracking it and how it was unfolding and how we would deal with that scenario in real-time wave analysis again. Again, all these charts are taken from real-time analysis. They're from the intraday and end-of-day services for the currency Group 1. And key levels associated with the pattern development are the very same key levels we would be using with regard to our trading plan and adjusting the risk associated with the plan. So just to look at the daily chart then for the wave 4 scenario, get some context into the look, where we did have the sharp pullback, did alternate with the sideways wave 4, and we pushed above the midline of the channel. We're watching now for a breakdown of the channel. Again, higher wave degree charts, back to the low of the previous fourth wave at 1 lesser degree. We're currently trading, or we were trading at 111.40. So this is the same guidelines, it's the same scenario that we're tracking and looking out for. It's not always going to play out, but it's being aware of the risk associated with the potential. So here at this moment in time, if we were to consider flipping our outlook, we know that if wave 1 has peaked and wave 2 is unfolding, that we could run down and test the low of the previous fourth wave. And we know that if we trade back above 111.40, it's questioning the idea that wave 1 has peaked. So that's the information that we need to take, and then we work with pattern development. So before we finish up, I have the final chart that I'm going to share with you, and that was from the internals then of the decline, and we did start to come down and test the lower boundary of the channel. So something to be aware of, I wanted to just talk about the price action that unfolded from a fourth wave. That is a specific trading strategy and setup that we look for, and something that we should be trying to develop and hone in on. So going forward, we'll spend some time in the next lesson establishing a trading plan and a trading strategy around that, and even look at the very same price action and see, can we just focus on this specific setup and trading the impulse fifth wave for a while. Any questions or queries, don't hesitate to email in. I'll get back to you. Any questions or feedback is greatly appreciated. Thank you for watching. Have a good day. I'll speak to you all again soon.